The world is also looking to the interest rates in the U.S., and the U.S. Federal Reserve concluded its two-day policy meeting. The statement describes the Federal Reserve's decision to lower the benchmark interest, marking the second such cut this year to a level lowest in 3 years. So our correspondent Tianeng has more on this issue.
Jerome Powell, chair of the Federal Reserve, emphasized the need to balance risks and remain flexible amid limited economic data caused by the nearly month-long government shutdown. Accordingly, Fed lowers the benchmark interest rate to a range of 3.75% to 4% by a quarter percentage point.
The public and private sector data that have remained available suggests that the outlook for employment and inflation has not changed much since our meeting in September. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals and in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a quarter percentage point.
Market reactions were mixed. The Nasdaq gained 0.5%, while the Dow Jones and S&P 500 slipped slightly, signaling investors were underwhelmed by the Fed's cautious tone and lack of a clear pivot toward a more aggressive easing cycle, particularly one that could spur AI-related investments. Analysts note that inflation risks remain, driven by tariff uncertainties and a softer job market.
Manufacturing companies or the suppliers can do that in a perpetual manner because it will impact too negatively their bottom lines. My thesis is that they're going to be absorbing a lot of these increases, different parties within the supply chain, but a lot of the parties before you get to the end-use customer through the end of the year, because you've got holiday season, you've got kind of the psychological benefit of not having too much disruption, but then come next year, I think especially in the United States, we're going to see some pretty significant price increases that are going to be passed on to the consumer.
With roughly 6 weeks until the final policy meeting of the year, Chair Powell signaled caution about further rate cuts in December, worry of loosening too quickly and reigniting inflation pressures. Tianeng reporting for Vietnam Today from New York.